Back with closing trades right here on ET now. While autos, of course, are the ones which are powering ahead, but the Nifty is also. We're holding up a good 117 points up in the green, nudging that 24,500 print. On that note, let me welcome on board Ajay Vora, Head Equities, Nuvama Asset Management, joining in at the show right now. Ajay, hi, good afternoon. Good to have you on the show. Ajay, help us understand how is it that you're dissecting the market construct, because the kind of move that one has seen since the election results has been really parabolic, and now you have another event, the budget, in just about 2 weeks.
Yeah, hi, good afternoon, and thanks for having me on the show. So broadly, we have been constructive on the markets all throughout last year. Although there were some hiccups in between, but I think till the time the earnings growth profile is pretty strong, I think that there is very less downside to the markets, and that is why from the election outcome day also we have seen a very sharp rally from the lows. Because honestly, a 15-16% compounding kind of a earnings growth is pretty much visible right now. And you may have certain sectors which can outperform and some sectors which will be a laggard, and that is what our job is, right? To identify sectors which can outperform and eventually generate alpha out of that. So I think that a couple of sectors which have been laggard, like IT or pharma, are looking pretty good from here on. I think the growth can surprise what the market is expecting, and basis that, I think that on an absolute basis you can get a decent upside in these two sectors from here on.
Okay, so that's interesting. But what's also been intriguing, Ajay, is the fact that over the last 1 to 2 years, there has been quite divergent moves within, let's say, public sector entities and public sector and the private sector entities. While public sector entities have definitely outperformed by a huge margin, do you see this trend continuing, or there could be a reversal on the cards?
So I think that if you look at the numbers, for the public sector banks, the CAGR over last 3 years, right, from FY21 till FY24, at an aggregate level, has been almost 2x that of the private sector banks, and that is why if you look at the whole performance of the public sector banks, it is way ahead than the private sector. It's mainly coming on back of the higher CAGR over last 3 years. But I think from here on, the major tailwinds which the public sector banks had is somewhat moderating. And my sense is that, from here on, it will be more or less in line with the private sector banks, or it can be a little lower. Because if you look at the valuations for most private sector banks, they are looking very attractive from here on. And therefore, I think large part of the rally for the public sector banks, which was outperforming, may be more or less in line with the private sector banks now.
Okay, so that's a view on the private and the public sector, but what's the view on urban discretionary versus rural recovery? Because again, last 12 to 14 months, the biggest theme was affluent India, and it did really do well in terms of tourism, in terms of those, affluent stocks. But is it time now to perhaps make a bit of a churn and go for the rural recovery plays? Is that a good tactical trade as per you just around the budget?
So clearly that is the expectation, because you are absolutely right that the rural consumption or even consumption at the lower end has been suffering since a while. And my sense is that historically we have seen this kind of a budget more or less being similar to what the earlier budget was, which was there in February. But I think this time there can be some major push on the consumption side, and therefore rural recovery can be expected, which has been a big laggard. Also, another important thing to note over here is that over last 3 years or so, the government's revenue expenditure growth, meaning revenue expenditure as a percentage of the overall budget, has been coming down significantly. So all the free money which was getting distributed in the rural area has been coming down, which has impacted the overall consumption to some extent. But I think that the money that has been spent on capital expenditure will result in a lot of jobs, and therefore more income, more disposable income in the hands of the consumers. But broadly, I think that in the current budget, in the upcoming budget, we can expect some sort of announcement which will boost the overall consumption.
So, Ajay, where is it that you see the profit pool getting created from here onwards? And I ask because, we're soon going to be counting down to earnings, but TCS HCLT is slated for this week itself.
No, so I think that, sorry, I missed your question, the initial part.
No, I was just wondering, where is it that you actually see profit appreciation coming in,
Okay.
either in this quarter or next 2 to 3?
Yeah, so if you look at the overall profit growth which is expected for FY25, almost 60% of that is coming from banks and metals, right? Because last year, if you look at it, a large part came from autos to a very large extent. But this time, auto as a sector, or even I would say IT as a sector, is going to be pretty muted. On the other hand, you'll see banks and metals contributing in a big way. Whereas, oil and gas again, which was a major contributor last year, is expected to show a little bit of decline, mainly because of the OMCs. So all in all, I think that 60-65% is coming from banking and metals, which should ideally do well from here on. But as I said, that stock prices move basis beat to the expectation. So I think the expectations are pretty low on the IT side, and if we get some sort of upgrade over there, the IT sector also can contribute to the rally.
Before we let you go, Ajay, any top themes or top bets right now that you're watching out for?
So I think that there are two broad themes which you are playing. One is on the consumption side. This whole both at the domestic level, whereas the exporters to the overseas market of the I would say the household goods. That space looks interesting, and as I said, within domestic also, the consumption should ideally now pick up, because if you look at segments like apparel and the whole vacations, the whole hospitality. So my sense is that demand is still very robust over there. So that is on the consumption side, and the whole infra play we are participating through cement as a sector, because we believe that with the consolidation happening, there will be a decent price discipline, and which will result in higher profitability going forward. So on the capex side, I think cement is a better way to play, and consumption, there are few categories which can surprise on the growth.
And certain consumption categories, these are something to watch out for. Thanks, Ajay, for making time and speaking with us. Appreciate your time. But in the meantime, let's head back to our technical expert.